We have quite a conservative approach to doing business. We like to find businesses that have a few key tenants. And those tenants are around having a very stable revenue stream, recurring revenue stream, preferably perennial businesses, but also businesses that are quite profitable. They have, let's call it a trouble cushion, as I like to call it. If there's a bump in the economy, that there's enough cushion in the EBITDA to protect it from the various forces that may govern the company in that given time. And I think what's important about that is that we're able to fly the plane, we're able to tinker with the engine while flying that plane. And it's really, I think, a capital preservation strategy as well, because ultimately we're protecting the downside while also applying the top spin of Traub Capital to provide the growth and therefore the returns that are needed. One other thing that I think is important about the strategy is that those companies are companies that have one of two things, or both. A brand that is very well known, that is the leader in its category, or an enthusiast consumer, a consumer that stays with that company for one reason or another based on the activity or the service that it provides. And if you have both of those things, ideally, you have a customer that cares about you, that stays with you, that tells their friends about you, and which is a very powerful thing to have within the economy, but also a brand that is well known and that you don't have to work as hard to get into the collective subconscious of the buyer or the consumer in question. So we do a lot of work around consumer insights with various technology platforms to try and uncover the truth around that question as to whether or not it is indeed a recession-resilient business based on those tenants.